So a $1,000 investment in Microsoft as initial public offering in March 13th, 1986, that would be worth now $1.6 million.
I fight to live, I fight to strive. One day I'll have what I want in life.
Hello and welcome to another video. My name is Exo, and today we're going to be taking a look into Microsoft stock, doing a company analysis and having a look at its fundamentals, seeing if it's a company you want to add to your portfolio. So a $1,000 investment in Microsoft as initial public offering in March 13th, 1986, that would be worth now $1.6 million. So that really shows you the power of a good company and time in the market. This assumes dividend reinvesting, by the way. So any good investor should learn Warren Buffett's Rule 1 and Rule 2. So there's Rule 1, don't lose money. And there's Rule 2, remember Rule 1. Now this is all well and good, but it takes a certain individual and a certain mindset to achieve this result. Again, in this video we'll look at valuation. That's one of the ways you can do this. So what does Microsoft look like in today's climate? Well, if we can take a look at history, then this can tell us a lot about a company, as those who do not learn from the past are doomed to repeat it. So starting in 1974, Bill Gates and another person, Paul Allen, both talented and obsessed with computing programming. That's when they first founded the company. I'll show you on my screen what I am actually looking at. These are my notes that I've took on the Microsoft stock, and you'll see how in depth it goes. So the name Microsoft comes from the idea of making software for microprocessors. So just blend them together, that's what you end up with. So in 1985, Microsoft Windows was born, and then in 1986 the company became public. Then by 1990 the company released Microsoft Office, bringing the well-known tools like Word, Excel, etc. In 2001 they released the Xbox and Windows XP, and now the Xbox and Windows XP have gone through numerous updates and generational changes to become core principles of the computing industry and gaming industry today. So further down the line, they continue to innovate and bring new tech to the world Office. World Office was introduced to the cloud, Bing was made, and Skype was acquired, along with LinkedIn. LinkedIn, I don't know if you're familiar with it, it's just a platform for sort of a professional social media platform, I guess you can call it, but mainly it's just used for finding jobs and stuff like that. So Microsoft also bought Minecraft. Minecraft was also purchased by Microsoft, expanding its game division, and this was acquired for $2.5 billion. And then in 2017 saw the introduction of Microsoft Teams, which I'm currently using now, as I'm going to be at uni soon. You can look at my Dividend video. It says why I'm doing that. So the tech company is ajar, many avenues for revenue. So you can never really get this company pinned down, and I do not see it falling or having any real major competitions. We can list a few of them later, but all in all, it's a safe stock. So the segments can be broken down to three sectors. So you have the productivity and business processes, you have personal computing, and there is one more to do with like cloud-based stuff, but that one is a bit more complicated to explain. I might need a separate video for that. So with the productivity and business processes, this will include things like Microsoft Office, LinkedIn, and others. Microsoft Office includes the well-known products like Word, PowerPoint, Excel, OneDrive, etc., and many more. They are currently trying to switch to a month subscription service, as this will allow for a better stability and removes the need for people to purchase upgrades, as this was a problem they was finding moving down the line, having different support networks for different versions. So this just makes it all standard across industry. The cloud subscription base works best for the consumer and the company, allowing for access on any device and consistent revenue growth. Google continues to be a competitor, as they have their products seamlessly integrated with Google Chrome and things like that. So you might have heard of Google Sheets, that's like similar to Excel, and then I've used Google Sheets before myself, so that's the main competitor on that side. And as we all know, Chrome dominates the search engine arena. So, like I said, LinkedIn is the largest well-known professional social media platform with a constant need for jobs. LinkedIn's presence is stable and will always be needed. Now, there is competitors such as like Indeed and some others, but in reality, if you're looking for a job, you're using all of them. So I do not see this as a downside. Some people have listed the competitors as being one, but I don't. For me personally, when I was looking for my jobs, I used every platform I could, every website. I sent off thousands. So, okay, so the personal computing segment, this also includes the gaming segment, Windows, Surface devices, accessories and such. Windows controls 76.26% of the market in desktop computers and 31.6% of market behind Android. So as you can see, they hold a dominant position throughout, which is another reason I love this company, and it is my biggest position along with Apple, but Microsoft beats Apple in my opinion. The gaming segment doesn't really make money from the console itself, but by this subscription it has. So you have the Xbox Live. The demand for new consoles is high, with the Xbox being sold out, being hard to procure even. PlayStation beats the Xbox in sales, but like I said, it's not about sales for Xbox, it's about the monthly subscription. So yeah, Xbox Live and Game Pass are the two money generators that they have. The Game Pass being a new idea that I personally believe will take off, as this works like a Netflix subscription, giving the user a library of titles to play when traditionally nowadays a game would cost £50 to £70. This is very cost effective at £9.99 per month now for this subscription, and then if you want the Xbox Live you can do it as a package deal for $14.99. So that's like the price of free Starbucks, like, come on. So it's a very affordable way of doing it. I believe it will be the future for Xbox, and then games will just not really be sold individually if they're not locked like that. They are also trying out a thing, cloud gaming. It's cropped up recently throughout the years. It's not too widely known yet or used. So this would eliminate the need to download a game, just search the library and play, just like you would in a Netflix, just look for a film, play. This would save so much time and would not have the need for all these consoles to be made, which would then, as I said, they don't make money, so you could just cut it all down and it would all cloud-based servers. All of this on top of Microsoft's pre-established background with the Windows and dominating the desktop. All of these combined just make Microsoft an unstoppable force, it seems, in my opinion. So now we'll look at some of the financials and then we'll summarise the topic. Okay, so as you can see now, the financial checks. We have a high level of debt in this company. These are just like the bullet point things, so we'll expand on them and talk about if they're actually a problem. These are just on the surface, if any one was to look, they'd be like, oh shit, what's going on? So it's a high level of debt, has significant insider selling over the past 3 months, is trading at 4.5% below the estimated fair value. The earnings are forecasted to grow 10% a year for the next 3 years, so a nice growth there. And earnings grew by 15.7%. The company is currently profitable, the share price is stable and has been over the past 3 months. The company's earnings are high quality. The profit margins have improved over the past year, and they have sufficient analysis coverage. So it's not just one analyst saying this, this is a group of them. I can't remember how many analysts did this stock, but it was in the double digits. There was no concerning events for this company. The shareholders have not been diluted over the year, past year even. So this just makes, what's the word for it? Promotes trust in Microsoft. There you go, bit of brain dead there. The revenue is meaningful, 153 billion. The market capitalization is meaningful at 1,848 billion. So big ass company, which makes it good for that debt level up the top. We'll go through that in a minute. They do not have negative shareholder equity. And that's all the basic checks. So now we'll dive in deeper and have a look at the company. So we want to first look at stability. As if you're aware, with my strategy, I'm a long-term dividend investor. Why Microsoft doesn't have the biggest dividend, I still think it works well for, I want stable companies, blue chip company kind of thing, because I'll be away on ships for 4 months at a time and I have no Wi-Fi, so I can't check stocks. So I want these stocks to remain stable and I trust and have faith in the company. So the volatility is less than 75% of stocks in the market over the past 3 months, and its weekly volatility has been 3% over the past year. So as you can say, it doesn't really move too much, which is good for me. Now the market performance in year 1 was 32.2% compound, compared to US market 26.6%. So this tells us a few things with the pandemic. Many industries suffered, but Microsoft performed well in the climate, being able to adapt and excel its products to more businesses. So when trying to analyze stocks and sheets in today's market, with the pandemic skewing all the metrics, it makes it really hard to find true value of a company or what is really performing like, because it's not necessarily their fault. But if a company can survive in this climate, then it gives you even more faith in that company. So if we look at the shareholder returns in the last 5 years, we have a graph down here. As you can see there, the blue is the dividends reinvested. So in 7 days, Microsoft in the industry were pretty close. Market was beating it, but in 30 days, Microsoft beat the industry and beat the market. 90 days was Microsoft a bit less. You get the picture. Now we've jumped down to the years because that's where I'm looking 20 years ahead kind of thing. So as you can see, in 5 years, Microsoft has returned more than the industry and more than the market. But again, you won't see as fast growth throughout now unless they do something radical, but I don't see it happening. And dividends, you can see are good there with the returns. So now let's look at evaluation. So Microsoft is trading below the estimated fair value, and the current price is 244.99 at the point of doing my research, compared to 256.59 valuation. So the PE ratio versus the industry is better, 36.2 compared to 58.1. The PEG ratio is poor. That's the PE ratio is price to earnings, and then the PEG ratio is price to earnings growth, and that's poor. Price to book value, that's 114.2 times industry, 10 times market, 2.6. just some metrics there for you. So if we go down and look at future growth of the company, 1 to 3 years it says 10% annual earnings growth. Microsoft revenue is forecasted to grow at 10.6% compared to the market at 10.7%. So not much difference at all there. Future return on equity is forecast to be higher in 3 years' time at 36.5%. So that gives you more faith in the management. Return on equity, return on capital employed, or return on assets are all things linked with the company's ability to manage, basically how they manage debt, how they manage their resources, etc. So this data goes all the way back to 2014, but it only goes 2018 here, but you can click on more data on the website. So as you can see, everything's been growing in tandem with each other, with free cash flow being tied to the earnings, giving us predictability. This is how I like companies to perform. They don't seem to do that too much nowadays, but Warren Buffett used to be able to use this and see where it went, and that's what I like to try and do as well. So the growth is predicted to be slower than the market and the industry, which is to be expected as Microsoft is very far along with its career and is still doing well to achieve annual earnings growth of 10% compared to industry of 13%, and the annual revenue growth 10.6% compared to 13.7%. So again, we can look at more past performances, as we can only predict what's going to happen in the future from the past, and then we can manipulate certain things in our favour. Annual earnings growth was 27.3%, that's quality earnings, growing profit margins. The current net profit margin, as you can see down here, is 33.5%, higher than the last year, so that's good to know from the management side again. Now we have some metrics here for how the past earnings growth analysis. That's the 5-year annual growth rate in the past and the last 1 year growth rate. So in the last 1 year, the company's performed better than the industry and the market. In the past 5 years, it has performed a bit lower than the industry, better than the market, but still a good 27.3%. So the return on equity is 16.9% compared to the industry of 6.5%. So that's very good, and again shows the management, their effectiveness. That's their ability to use their assets in the company, basically. And the return on equity is 39.4% compared to the industry of 12.5%. So again, very good. So if you look at financial health of the company, its short-term assets exceed its long-term liabilities, and that is crazy. So this is in a very good position in that respect, as most companies don't do that. And again, obviously its short-term assets would exceed its short-term liabilities. Its debt to equity ratio is considered high at 46.5%. However, the debt to equity ratio has been reduced from 58.5% to 46.5% over the past 5 years. So that's very good of management. Again, boosts my confidence as an investor to then know this company is trying to manage that and bring it down. The debt is well covered by the operating cash flow, 112.4% over, I believe, so you can pay that easily off, it's fine. And the interest payments on this debt are well covered by the EBIT, so that's 871.8x coverage. So no problems there with the debt. But again, if you only looked at the first thing I mentioned when I said I had a debt issue, that's just high debt, it doesn't mean a debt issue really. So you have to look at these things to find out. So now we can look at the dividends. As something as a dividend investor, I like to know these things, that's part of my strategy. Microsoft isn't the highest paying dividend, but again, it has the growth there, and I think it will keep increasing its dividend. It has done throughout the past. So the current yield is 0.91%, so it's very low compared to the other dividend payers. It pays $2.24 per share. The dividends per share have been stable in the past 10 years and have increased in the last 10 years. So It has a very nice payout ratio of 32%, allowing for the company to grow. Sorry. Cut. It has a very nice payout ratio of 32%, allowing for the company to grow and use its earnings to cover the cost of this very well. Cut. It has a very nice payout ratio of 32%, allowing for the company to grow and the earnings cover the cost of the dividend very well. The payout ratio is forecasted to decrease to 29% in 2024, so that will even be more money to reinvest into the business, and then it will keep allowing to adapt with the times. Having a high dividend yield, why, is nice in the short term. In the long run, if a company can survive, increase that steadily, and then keep adapting to new industries and changing, I think that will be the better play for me personally. The dividend per share has increased, but the dividend yield has decreased, and that again will become because of the company's price to buy. That's where that comes from. So if you buy it in a dip, then that'll be better for you as an individual. At current price, that's just what it is. So as you can see, the dividend growth summary here. So we have the 1 year growth rate, TTM is trailing 12 months, that's 10.31%. Then we have 3 year growth rate, CAGR, compound annual growth rate, that's 9.72%. And then again we have a 5 year CAGR, 9.82%, 10 year CAGR of 13.95%.
Okay, so we now have pulled up Microsoft's income statement. So we'll go through a few things on here. We won't go after everything because we don't actually need to. Some of the points we've covered and there were no irregularities, so we won't need to look at them. But we'll first look at like revenue, gross profit, net income, and maybe something else. But as you can see, for revenues, it's gone up over the years from 2016 all the way to 2020. They've had consistent jumps all throughout. 2018 saw a dip in the stock market. That's why some of the metrics you'll see for Microsoft, that'll be why. So you can see where I'm pointing now. Total revenue followed the same trend, and these are all in big numbers. It says at the top right. I'll scroll to it in a bit. Gross profit did the same, steady increases all the way up. Now gross profit is important because that's sort of like the take-home pay. Net income's like that as well, but the gross profit is after the expenses kind of thing. So that's a good one to see going up. Operating expenses, I don't really go through. As I said, I would if I saw irregularities, but when we looked at liabilities and stuff like that, we know how the company operates. We've been through the segments, all that's fine. And again, if you want to stop and look at any of this, you can, but for me, not really. So
that's basically what the balance sheet is talking about there. So if there's irregularities during that to check, then I'll check my balance sheets. Maybe some other stocks will go through that. If you want to know how to use income statements, balance sheets, etc., just let me know, and then I'll make a video on that. Other than that, my name's been Exo. Hope you enjoyed the video, and I'll catch you on the next video, which will probably be another one of these, or maybe something different, depends how I feel. I've got a lot more of these to get through though. So don't always remember, become the 1%, don't be like the rest, don't be a speculator, I'll beat you up. And I'll catch you in a bit. Peace.
Tell me pretty lies, look me in the face, tell me that you love me, even if it's fake.